So guys, let's talk. Let's talk. We already talked about how we do the analysis, which was obviously still going to do more work on that. But before we proceed on doing more work in the on the practical aspects of how to use this strategy and what to look out for, let's talk about a simple principle you should always bear in mind when you're using the strategy. And I'm going to say the first principle is that when we're using the strategy, right? I already told you that there are only two major direction a chart can move in, either to the upside or to the downside, which you have already seen, right? You can see price going back and forth, either to the upside or to the downside. But here's the thing: there's something called the trend, which obviously we've touched on, and then there's also the part of volume, right? If there is no volume, what you're going to see is price going back and forth like this, not creating major highs and major lows. When we talk about major highs and major lows, for example, this is a major high right here, this is a major low right here, and it is easier to capitalize on this type of movement to make money rather than this type of movements which they are just going back and forth, all of that, right? So we want to see clear movements like this. For example, I mean, I could literally even draw a trend or a channel with this right here. Look at this, right? We have a channel, simple channel, and we can literally take trades within this type of trade. This is a good sell opportunity. This is a good buy opportunity. This is quite a good opportunity to sell, but I don't think I would really, except I've got other conferences. This is a good opportunity to sell. This is a good opportunity to buy. So basically, when we have major highs and major lows, it's good for trading. But when we don't and we have something like this, then we don't necessarily want to look for trades. This is called a ranging market or a sideways movement. We are not looking to trade that. We want to trade this these clear movements, major highs and major lows. Now that's the first principle I want you to be aware of, which I mean that will be re-emphasizing what I already taught you. Now the next principle I need you to understand is that when we're taking these trades, we are either taking a continuation trade or a reversal trade. Pay attention, right? Listen carefully. When I say a continuation trade, it is a trade where basically we're taking a trade for, you know, in how do I put this? When I say a continuation trade, basically a trade that we take expecting or anticipating the same thing that has been happening to continue to happen here. That's what I mean, right? Continuation trade. For example, right here, we have price going down, right? So selling at this point or at this point, we're basically continuing the trade we already have here, right? Continuation trade. Basically, we are continuing what price has been doing, right? We are taking a trade in anticipation for price to continue to move in the direction it was moving in. Now, the other type of trade we can take is called a reversal trade, which I mean, we already talked about the few principles that we have to use to decide, which is the top-down analysis, and then we consider what has been happening, what is currently happening, what is likely going to happen next, and then we consider the trend, price action, and structure. Okay. Now, for the reversal, basically, it is when we're taking a trade in the opposite direction of what has been happening. Again, we have to apply the previous principle which I already taught you. What has been happening, what is happening, what is likely going to happen next. Very, very simple. Very, literally, very simple and easy, guys. Nothing hard about it. And then so those are the two type of trades we're looking for, right? Continuation trades or reversal trades. And then now that we've talked about that, let's talk about the entry types that there is in this trade. I want this course to be as short and straightforward as possible. That's why I'm recording this course, to help people get started and make money. You can watch it as many times as you need to, because literally the truth is you can't watch the video once and expect to understand everything I'm saying. No, it's not going to happen. Except you, of course, do have a background with trading, you have some experience, then maybe this can be easier for you to comprehend. But even if you don't, it's still going to be easy to comprehend. It's very simple, right? We're literally just looking for structures in the market. We're looking for trend structures and price action. We're paying attention to those. Again, if you guys have any question, please do not hesitate to reach out. I am always willing to help. That's why I'm here. Otherwise, I have no business being here. I can just go ahead and live my life offline. I mean, I don't like stress in the first place. So if you need help, do not hesitate to reach out. All right, reach out. I'll respond as quickly as I can. Now let's talk about the entry types. There are two major entry types when it comes to this trading strategy, right? The first one is what I like to call the breakout entry, right? For example, we have price moving in this way, and then we are looking to take a continuation trade, right? So for us to take a continuation, we can obviously maybe sell around here, but in a situation where we miss this, sell entry based on other, I mean, you have to consider key areas like demand structure and all of those, sure. Right? For a breakout, we literally want price to break below this area, and then for a breakout trader, it can literally just jump into a sell at the breakout with a stop loss somewhere, wherever. All right. And then his profits wherever the market presents the opportunity to take profits, which we're still going to talk about where to put your exit types. All right. So this is the first entry type, right? You're literally just taking the breakouts. We call people like that the breakout trader. You're just waiting for price to break out of certain areas and then boom, you jump into the trade, which is not always the best ways. But I would say backtest practice, forward test, whatever works best for you is what you should continue to do. Personally, I like to use the other method which I'm about to talk about, which is the break, close, and retest, right? These are three things now. We're waiting for price to not just break, we want price to close below the place it has broken. And then we're also looking for a retest, oftentimes on the lower time frame. Between 1 hour to 15 minutes is where I like to see this happen. All right. Now it is literally very simple, right? We're looking for price to break below this level, right? Close below this level, then retest this level, reject that level, and then I can take the trade to the downside. Now, for this type of trade, it is, I can take my trade at the rejection and the confirmation, which for me, now let's talk about is better, right? It's more confirmed. We have price, it has broken out of it, confirming, cool. What we're expecting or anticipating is already happening. Now we're further confirming that by waiting for price to close below that area. And once it has done that, we want price to go back to retest it and be unable to go above it again. So immediately price retest it and have challenges going above it, then oh, cool, then it means the continuation is more likely at this point, right? That's my psychology when I see that happen. And then now to further strengthen the trade, I want to see price not just, reject. I want to see a bullish, for in this context, right? In this case, I want to see a bearish confirmation. I want to see a bearish candle to the downside close, oftentimes on the lower time frame, 15 minutes thereabouts, right? And then I can get into that trade. This type of trade I feel more confident about compared to this, because price can literally just break out of this and then boom, go back to the top. No, that's not the one I wanted to move. I wanted to move this guy, right? Price can literally break out and then go back to the top and then continue to do, a reversal happens, right? So personally, I prefer this. This does not invalidate this. This is equally valid. It's just not my preferred way of trading. All right. Now, those are the two entry types for this context, right? The breakouts, because the other entry type that we can have is what I already spoke about in the previous video, right? It's the one where we now these are the two entry types for the continuation trade. Now, for the reversal trades, these are literally also as very simple. We are literally looking at key areas like areas of supply and demand, right? We want to see price reject off a key level and then confirm that key level and say, oh yeah, I'm actually going that way, and then we can take our trade to whatever area. We're still going to talk about exit types in terms of stop loss and take profits. Okay. Now this is the first entry type for this area, right? You want to see a rejection and confirmation for this trade, right? Now the second entry type is basically let's see, it's pretty much still the same. It's quite similar actually. For this one, you're literally just waiting for price to come to this level, retest. You're not waiting for a rejection. You're just taking a trade, hoping that price is going to reject off that level. Possibly you have other conferences, right? That is the second entry type. You're literally just waiting for price to come back, retest that area, and maybe at most you're waiting for price to reject. You're not waiting for a confirmation, and then you get into the trade to hold the trade to wherever your exit is. Now, those are the two entry types for the reversal method that we use for this simple day trading strategy. Again, it is a day trading strategy. You can, adjust it to suit whatever form of trading you want to do. Maybe scalping, swing trading, intraday trading, position trading, all of those. This strategy is literally very versatile. You can do whatever you want with it. I just, if you guys know what I'm giving to you at this cheap price, if you know the gold mine I am placing on your laps, I hope, please, I beg of you, make the best out of it, right? I'm literally still going to backtest all of these things I'm teaching you guys, but I want you guys to take good advantage of this thing and make money. That's the point of me recording all of these things. Otherwise, please make money. You know, that's the point of forex trading. Make money, make money. You know, all right. These are the things I wanted to talk about in this video, right? The two type of trades that we take: continuation trades and reversal trades, and then the entry principles around them, or the entry types. That being said, I'll see you guys in the next video, where we're going to talk more about, oh, we're yet to talk about exit, so I'll talk about in the next video. This is 10 minutes long already, too long really. I'll talk about exit in the next video. Peace out.